All right, good evening, everyone. All right, welcome to today's session. Today's a Wednesday, and we will be looking at some of the common instruments that we usually trade. Today's the live analysis for the New York session, and it's the 26th of March, towards the end of the month. My name is Sherman, and we'll begin shortly. Um, you guys can see the display, right? It shows a little bit of lag on my end. But let's just continue first. And if there are any display issues down the road, we can actually fix that. Quick disclaimer for everyone. Trading any forms of derivatives, right? Trading CFDs carries significant risk. Do ensure you fully understand what you're doing before you make any trading decisions. Right, we start off with your own demo account first before moving on to your live account. And if you're starting your live account, deposit bonus is still on. There is a 50% credit. So if you put up $1,000, you can get up to $500 credit in your live account. Okay, how it works is that the credit can be used to trade, open bigger positions, and any profits you make on top of that will be yours to keep. Okay, subsequent deposits gets you 10%. So make full use of this if you are starting your live accounts. Okay, so I don't think there is a fixed set of symbols that we're looking at, but we just go through the usual ones. I'll start off with gold, and then because it's the New York session, we might start looking at one of the indices. And as we go along, if you want to go through any other specific pairs, we look at crypto, we can look at the foreign exchange market, or even some of the futures if you guys are interested. Okay, equities as well. Okay, so gold has been something that we have talked about quite a bit. The analysis is pretty straightforward. We are towards the end of the month, so I would caution against overtrading a particular pair, especially when it reaches our targets. We will be looking at the setup for next month. Okay, so for those of you who are new here, let's talk a little bit more about the targets that we've set this month using the pivot points and where we are going into the month of April. Okay, so whenever we look at pivot points are a fixed set of lines that are created at the start of each period. So right now we are on the 4 hours candlestick, but the pivot points we are on the monthly. Okay, this particular pivot point that we're using is called the Wayne's pivot, and I've set the time frame specifically to 1 month. Okay, how it works is that you have the pivot point, which is the average of last month's high, low, and close. R1 and S1 representing resistance 1 and support 1, and then R2 and S2 representing the second level of resistance and the second level of support. All right, distance from the pivot to R2 is the same distance as the distance from the pivot to S2, and that is the range that we saw last month. So if you measure last month's low to last month's high, that is the distance. And basically what it means is that if we see the same sort of range last month, be it bullish or bearish, we should be able to get to either S2 or R2. Okay, so in this case, we have already attained R2. That is basically the range that we saw last month, right? And that is from the pivot all the way up to R2. Okay, whenever we are bullish, we are buying, trying to look for an entry just below the pivot M2. Okay, and our target would be R2 M4. Can be anywhere in R2 M4 depending on the price action, but the midpoint is a good guideline. If you're bearish, you want to sell just below M3 above pivot, and you want to target M1 S2. Okay. The way we look at the bias or how we define whether it's bullish or bearish, we just look at the most recent break above R2 or a break below S2. Okay, so in the case of gold, we broke above R2 and it has to close above R2, okay, in January. And so we are bullish and specifically bullish above this level here, okay? In layman terms, for those of you who just joined, what this means is that there is a set limits or basically a hypothetical limit for each month, right, based on the calculations of the pivot. And we basically say that anything above R2, it gets too expensive to buy. Anything below S2, it gets too cheap to sell. Okay, in this case, when it breaks above R2 and buyers are willing to pay a price above R2, right, this is something that it's an anomaly out of the norm. And in that scenario, we are bullish above R2. Okay. So right now you can see this in the month of February, we broke slightly above the R2 and then we came back down again. This month we broke above just slightly above the R2 and then we came back down again. So what is the plan set up for April? Okay, same thing, the analysis remains. We are looking at the pivot M2 for next month. And this is not fixed yet, depending on what's going to happen for the next 3 days, right? The closing of this month is going to decide where this area is going to be. And that is something that we'll take a look next week. But ideally, we want price to hit down lower, right, into an area where we can consider that as a discount before we look at a buy again. And then our target will be somewhere around R2 and 4. Okay. This looks promising because of that previous high that we saw in February. So ideally, if price do in fact get down to this level, we will be looking for the entry to the upside. Okay. Same thing for the month of March. This was the previous high. Sales were piling up at this point here. And so essentially once it gets to that area, this will trigger those stop losses, and we are seeing that push to the upside. Okay, so this is the monthly. We are done for the monthly. In most cases, if we hit the top of R2 by the middle of the month, we can probably expect a push back down to the pivot. But right now, we are spending one entire week within a short range, so we would not be expecting that. What is the range that we're talking about? That is the Friday range, and the Friday range is this candle here. This was the Friday high, and this is the Friday low. So this entire week, we were in this range. And if we change back to the settings again, time frame, change it to a week, we can do the same analysis on the weekly. Okay. So the entire week, okay, at the start of every pivot point or every period, in this case, every start of the week, we will fall between M3 and M2. And you can see the entire week, we were just in this range. So nothing much that we can actually do unless we break above. So the idea when we are in a range, we usually look at the bottoms and we buy the bottoms and we sell the top until we get a push above the upper limit or push below the bottom limit before we look at that as the prevailing trend. Okay. This was the monthly R2 break. I think it's January R2. Okay. So that coincides with our 10th of March break above the weekly. So this is going to be a strong support. I would think that if you're a buyer, you will only buy above the Friday's high, or you're going to wait for price to hit down into this area before moving higher. Okay, so this is quite the rough plan. This is the more conservative plan. And this high has to be an area of interest, right? Where the sellers failed. So we might get down back into this area, but it will be a fast dip into this point and then jump up. One good event that may happen for us to actually get down into this area would be our NFP, which will be on the first Friday of each month, which is going to be next Friday, okay, the 4th of April. Okay, so that's kind of like the idea, and we want to get down into this monthly R2 from January, which will fall within the M2 pivot of the month of April. Okay, so then that leads us to just the daily profile right now, and we can see the setup for the day. Okay, you can see the R2 and the M1s are converging, and you can see the range from R2 and S2, they're getting smaller and smaller. So we can expect a breakout to happen. Maybe not this week because of the type of news that the catalyst that we are seeing. Personal spending on Friday, that might be the catalyst for us to see a break out of this structure. Okay. Meanwhile, on the daily, we are between M3 and M2, so nothing much that you can actually look at. Okay, we are creating higher heights, but we are also we are creating higher lows, but we are also creating lower highs. So in such a scenario, it is usually a case where there is no direct or clear direction for traders, and people are taking profit earlier. Okay, so let me just get that triangle out. Where's my triangle? Okay, so you can see this lows forming, and the highs we're getting a little bit lower every time. So we can probably expect a move within this triangle until a breakout happens. Whether it breaks above or below, that's something that you'll probably not predict. But once it breaks out, it will be a clear breakout. And whatever consolidation that happens, that is basically that prevailing trend that we'll be looking at. Okay. And you can see a straight downward move, a straight upward move. And usually in this sort of scenario, there isn't a chance for a second tick when you're looking at a position. So what I mean by that is once it moves in a certain direction, okay, the next time round, it is coming back into this area. It's a full move back down without a retracement along the way up. Okay. Same thing like this happened last week, yesterday, right? So very big moves. And the only time when it retraces back down to this starting point, it's after one entire cycle. Okay, so you can expect all of the traders to be doing something like this right now. Right? And once it sell off, it is not coming back for any sort of retracement. Okay, so back down to the 5 minutes and the 1 minute, we can see what's the setup for tonight. Okay, we want to look at the volume as well, right? The volume for this move up, okay? The volume for this move down, and last but not least, the volume for this move up. Okay. So you are seeing that volume piling up at the highs right now, which means that the sellers are coming into the market to fulfill those transactions. the midpoint of this entire move, it's here. So we only can look at confirmation of a sell once we get below this volume and close above this volume. This particular move to the upside gives us the indication that there might be another move to the upside before it hits down lower. Or it might break out from here. Okay, so what we'll be interested in is the volume that starts off from the low. Again, why do we want to look at the volume from the low to the end here? We want to see if the bias from the bottom has already gotten out of the position. And when this happens, your volume profile, the point of control, is going to shift upwards, right? If all of the bias here were to look for an exit at this point, the volume is going to surge up to this point, okay? And if we continue to accumulate volume here and price doesn't move, and we stay below this point of control, okay, this will be getting in new sellers for the move to the downside. Okay, if volume maintains at this point and we break above this volume profile, okay, this means that the additional volume that came in, right, initially was due to the selling of all of the earlier buyers. But as we continue, okay, this additional volume is pushing price up, which means that buyers want to take price up higher, okay? So in this scenario, I'm just showing the alternative, but in this scenario, as long as we maintain below 30.28, okay, and going into the start of New York session, which is at 9:30, about an hour and 15 minutes from now, as long as we maintain within this area below this POC, we might see some sort of movement to the upside just to take some additional liquidity. But as long as we maintain below this POC, we will be looking at prices to go head down lower. Okay, so are we gonna take, the question is, are we going to be targeting for these two highs? The buyers did not attempt that move, right? And they sold short right at this break of structure, right? So again, at this point in time, if we're going to make a higher high, okay, to 30.35, right, you might be able to capture this 30.35, but the conservative move will be waiting for it to retrace back down to that point of failure before breaking out. And this move is going to be much bigger. Right now, we're taking more risk if we're going to buy at this level, because the fact that we see a stop at this level here, right? Price delivery all the way up to this area, and then downward candles happening means that there were sellers, buyers exiting. That's number one. And number two is whether or not new sellers will come in to push the price down. Okay. Even if the additional volume is by new buyers, right? This is probably the maximum that you can get, right? And then there'll probably be a retracement back down into this area of failure, and then new buyers will come in to push the price up higher. Okay, so if you're okay with taking on additional risks, yep, then this would be an area. In fact, you would want to buy around this area here. But in a triangular pattern, right, this area usually do not provide much of a support. Okay, same thing when we saw this move to the upside, right? This was the area of maximum or the median volume. You can see that as price comes into this area, it cuts it off and then hit down lower. You usually find support at the median whenever there is a clear trend, but in this case, because we are creating higher lows and lower highs, right? You form a triangular pattern, so you wouldn't want to take any volume in between as your area of support. Okay, your area of support will be something at this level here, okay, right at the bottom. Okay, right now you will probably not see any structure creation, right? Based on what we saw this morning, Singapore time, right? There isn't much of a structure. So you would probably be trying this sort of a move, right? As long as it maintains a downward move, you should be able to continue that sell all the way down until it breaks up. Okay, same thing for this early this morning. Okay, maintain below this channel, and once it gets out and there's a bullish move, that's where we look to buy. Okay, so we still have some time. So this is gold. There isn't much. I think this is an instrument that a lot of you guys like to trade. But there isn't much that you can do for the rest of this month, as long as it maintains below this candle here from last Friday. Okay, there is no clear trend. It is an upward trend, but the upward trend begins from here. So when we consider this move to be a discount, okay, this was a range. So the actual move starts from here. So somewhere around 29.94, that is where we'll start to look for entries to buy. Right now, it's still considered expensive. So you might see a break below that triangle, down into this area, then up, 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 up. And of course, the target for, I'm just going to set the targets for April, okay? Targets for April is 31.60. Okay. As long as the momentum from this month maintains for April, we can probably see a move to 31.60. Okay. So now let's take a look at indices. Okay. So great move from it's quite a recovery from that 10% downward move. But you can see that the formation of this Friday low creates a parallel channel. Okay, what is considered a premium? Take the high down to the low. Okay, somewhere around 50. This is S&P 500, US 500. Okay, something like this. Around this area, we will probably see a covering of this gap, and then if we get into April the 2nd with the tariff news, we might see a break before moving up higher. Okay, for a bearish flag to turn bullish, a double bottom has to form. Okay, why is that so? Because this is will be considered expensive when we're in a downward move, and bargain hunting starts below at the nearest bottom. Okay, there is another way, right? Very bullish move, but this it's pretty. This will be outside of normal market norms where there is a sudden surge of um, bullish news for prices to be moving back up to the all-time high. Okay, so I think we'll just maintain within this area, back down, and then tariff news. If tariff news, if it's relaxed, if it's not what the president says it was supposed to be, we might continue upwards. And then fundamental reasons might cause this to break below, or we just continue up this trend all the way up to the double top, okay? And then that is where we look at the decision of breaking out into a higher high, or from there we'll be looking at a sell-off again. Okay, I'll give you guys an example of when this happened. Okay, you can see 2024, 2020. Okay, actually, this would be a bit more okay. Fast sell-off, and the movement has to be a V-shaped move. You can see that every single day, this is on a daily chart, every single day was a bullish day, back up to the start of that move. Okay, and once we make that V shape, okay, retrace 50%. Yeah, I'm not trying to curve fit this, but if you take this high to this low, okay, and then as it comes back down 50%, that is the discount, and then a higher high. Okay, same thing, V-shape recovery. But were there any scenarios where there was a bearish flag and we continued downwards? Probably something like this, but it's on a very small scale. Right? Bearish flag did not try to make that all-time high again, and then it falls off, has to create a double bottom before that move to the upside happens again. Okay, this is where the buyers will come in at the discount to get prices up higher. All right, so this is the S&P 500. For the next couple of days to the end of the month, I think people will be cautious, but we just want to make sure that you are not buying at the 50%. Okay. You can scalp that move all the way up to this level here, 58.24. But you do not want to hold on to that positions expecting it to go back up again. Okay. There are a lot of pockets of areas of sell-offs, so we do not want to be looking to hold those positions into these areas here. Okay, there is a gap for all indices this week. Okay, so at some point this gap will probably be filled. Whether or not it will fill before it moves up, or it moves up and then back down to fill it, okay, that's something that we cannot determine, but this is something that we can take note of. If we get back down to this area, this is going to be considered a discount at this given upward move. Okay. So probably a sell-off before the tariff news, if we follow this channel. Okay, let's look at Bitcoin. Bitcoin would be very attractive at this level. Okay. Still in a downward movement until it breaks out of this channel. Okay. So if we break above this will be a little unusual because this area is somewhat induced. We probably see a leg lower to 70 and then consolidate before moving up. I mean, if it's at 70, a lot of buying is going to come in. Because that was the last all-time high from this year, 3rd of March. No, last year, 3rd of March. Okay. And then you can also see how this maintains. The exact date probably sometime in May. Cool. Any other instruments that you guys want to look at? Otherwise, yeah, I think we covered quite the more common instruments that you guys would be interested in. Yep, so that will be the trading plan. This is something interesting if you guys are interested. You can see this slow bidding to the upside and then it pushes up. This is the accumulation of sellers. You can see the sellers coming in, right? But they're not getting the momentum that they want, which means that the breakout is going to be explosive. Maybe now. Oh, yeah, it might be now. Or it might be another leg down and then it goes up. This, I would consider this as a breakout. So what I want to see is I want to see this move up to at least 30.29. Let me put that 0 point there. 0. Okay. I want to get up to at least 30.29 and 30.27 will be a discount. Okay. Then this is where I will structure my entry towards the upside. Where would your stops be? Your stops will be below the start of that move. And you're targeting 1:3, which is around here, 30.34. Okay. So that's about 7 pips, 70 pips. All right, cool. Lots of spammers in the chat right now. So yeah, I think that's about it for today. If you guys have no questions, then we will be calling it a day. Same thing, 2 links here. First link, vantagemarkets.com/webinars will be all the webinars that we have gone through, and we save it there in the following week. And then support at vantagemarkets.com. If you have any questions, put my name down. My name is Sherman, and address it to me, and then I'll answer those questions from there. All right, if not, I'll leave this page up here, and if you guys have any questions, I'll hang around for a bit. Otherwise, all the best to the upcoming trading session, and then I'll see you guys again tomorrow.